Is this the end of crypto in America?
Hope so, don't think so. But
you hope so?
Yes.
Why?
Well, this is an investments network, and people might say, hey, it could go up, it could go down. The question is it good for America? And the answer is no.
What's up, everyone? Okay, I think this is getting a little frustrating. Even with the release of the Hinman documents, which clearly shows foul play from the SEC's side, XRP only jumped 10%. Imagine that! But when the scales are tilted and the SEC is winning, this coin is witnessing a lot of suppression. So who's moving the masses in the wrong direction? Or better yet, who is suppressing this coin? We've got a lot to talk about today. So without further ado, let's roll that intro and get into today's video. Also, stick around as I'll be giving insightful technical analysis on the XRP price action. As always, welcome to Moneyside, your favorite crypto channel. If you're new here, hit that subscribe button and turn on notifications so you get updates when we drop new videos. Don't forget to smash that like button. You can always leave a comment or a question in that section below. We were all expecting big things from XRP after the release of the Hinman emails, and everyone was in a frenzy when we saw a 10% increase, but it came back down again. Here's an insightful article that talks about what could have happened. This article talks about the Hinman speech that only contains opinions on Ethereum and not XRP. However, if you have been following through the court proceedings, Ripple's defense system has on several occasions compared XRP to Ethereum and also requested the SEC to provide information as to how they came up with the idea that Ethereum is not a security while the rest of the cryptosphere is. The SEC so far has not been able to provide information on the same, and they've claimed that the company doesn't view Ethereum as a non-security. Unfortunately, due to the press, the public doesn't really know what's happening in court. As a result, XRP's price never made any significant jumps. However, Ripple still has a fighting chance if they mount their defense in the best way possible. XRP's price could potentially move to the downside if the bulls do not make a stand. Now, what do I mean? XRP Crypto has been pointing out attention to that hangman candlestick. And the reason why this is important is that a hangman candlestick is a sign for a trend reversal. That said, it's crucial for the bulls to maintain the cost above 45 cents at any means necessary. If not, the bears will likely have the upper hand and push the price down to the 35 to 37 cent range. Traders should pay attention to this because the bear trend coincides with what XRP Crypto calls the final wake-up line. The bulls and the bears are currently going head-to-head with each other at the edge of a macro falling wedge. All the possibilities can be avoided if the bulls manage to push the price back up to 58 to 63 cent range. If you zoom out a little bit and take into account other factors such as the usability of XRP and the high probability of Ripple winning this case, experts speculate that XRP could hit $50, which is a crazy 9,600% rise. That's mind-blowing. If you take a look at another tweet, XRP still has the potential to surge up to $2.80 to $4.60. That's according to XRP Crypto's representation of this coin going straight to Valhalla, which could happen if this coin's price breaks into the white color code signal. XRP finishes his tweet by saying that the XRP army needs to stay patient as the potential of this coin to create generational wealth remains possible. If XRP makes it to the $2.80 to $4.60 range, that's the start of Wave 1, and the chance is that this coin's price could correct back to $1 after Wave 1. Later, the coin will embark on a crazy bull move to initiate Wave 3, which will likely be more intense than Wave 1. Wave 3 will see the coin reach $12. Or if the upward pressure continues, XRP will reach $50. And before you ask, I don't know what happened to Wave 2.
But Chairman Gensler, your record of failures to protect investors and abuses of power make it clear that we need to restructure the Securities and Exchange Commission. The failures are many, but let me cite some of the abuses. You average more than 2 rules proposals a month. You provide inappropriately short comment periods. You have unworkable and unlawful ESG disclosure mandates on the market. You have essentially a Hotel California rule for crypto where you can check in anytime you like, but you can never leave. You have endless discovery with no resolution and no clarity for the captives in the market. You have unworkable proposals for overhauling equity market structure, a de facto ban on crypto through proposed custody rule You have high staff turnover, unhappy people leaving your office, and unhappy companies and capital leaving our country. To correct a long series of abuses, I'm introducing legislation that removes the chairman of the Securities and Exchange Commission and replaces the role with an executive director that reports to the board where all authority would reside.
Well, Davidson and Emmer claimed that under Gensler's leadership, the SEC has become politicized. And both also take issue with the current SEC lawsuit against cryptocurrency giant Binance. Joining us now, Ohio Congressman Warren Davidson, representing the great Miami County. Congressman Davidson, thank you for joining us. What is your biggest beef with SEC Chair Gary Gensler?
Well, it's a long list. He's been so bad at his job. I mean, frankly, what he's highlighted is we don't just have a Gary Gensler problem. We have a problem that's structural with the SEC. So part of it is Gary Gensler has been uniquely bad. There's been more rulemakings under his leadership than at any time since Dodd-Frank passed. You know, Dodd-Frank was a major overhaul of the financial regulatory framework, so you would expect lots of rulemaking. All that happened with Gary Gensler is Gary Gensler became chair of the SEC. They've averaged like 2 rulemakings a month. They normally don't even have a long comment period, so it's shortchanged. He clearly doesn't have the legal authority to implement an ESG rule to change the reporting and disclosure requirements for every publicly traded company, but he's forging ahead anyway. With respect to crypto regulation, it's like Hotel California. You can check in, but you can never leave. They go into endless discovery. Almost no one ever gets a no action letter after years and years of discovery. He's trying to overhaul the market structure for equity markets. We have the best capital markets in the world, and he wants to fundamentally remake them in a way that basically says to retail investors, to protect you, we're going to keep you from participating in the market. That's not investor protection, that's investor exclusion.
We've pointed this out time and time again. Gary Gensler is not protecting the crypto space, but his own selfish interests. He claims to have investors in mind, but his real deal is that he wants to get rid of the entire crypto market as we know it. The lack of clarity in the U.S. and the fact that Gary Gensler is hostile towards crypto has eventually led to crypto companies leaving the U.S. to seek greener pastures in other countries. In fact, Ripple is already spearheading this move by expanding their reach into Europe. Chances are you are likely to see more headlines like these when it comes to the crypto market, and that is all thanks to Gensler's actions. Without a doubt, the U.S. lacks clarity, and that will potentially put the crypto market up for failure. Most crypto investors in the U.S. will also suffer from Gensler's action. The U.S. needs to find a compromise with the crypto world so that everything can align perfectly and the crypto world gets to flourish. However, that will not happen if Gary Gensler stays in that office. According to Hinman's speech, as long as a token is sufficiently decentralized and the purchasers do not have any expectations from the company, then the token is not a security. Now that clearly describes what Ripple is doing with their token. XRP owners have zero expectations from Ripple, the parent company. More importantly, most XRP owners did not even have an idea that Ripple was the parent company. That's largely what happens with most crypto tokens. So in regards to the matter at hand, I believe the SEC is going after Ripple to serve their own purpose, but not to help investors. That's because they still do not have clear regulations as to what a security and a non-security is with regards to crypto. And all that crypto companies have to go on is the statements given by the officials, in this case, Hinman. So why is the SEC going after crypto instead of making rules and regulations that can be used to clarify what a security is in the open crypto world? As always, trade safely, guys, and always do your own research. Thanks as always for watching. Couldn't be here without you. Don't forget to like this video and please click on that subscribe button below. Be sure to turn on notifications so you get informed whenever we post our amazing content. Thanks again, and we'll look forward to seeing you on the next Money Side.